So, how has sentiment been in the crypto space since our big pullback in December? Well, people that are watching this video and myself, we watch crypto regularly, but the masses seem to be losing interest. And this is something that you see during long consolidations or slow corrections, things like that. There haven't been much in the way of fireworks within the crypto space. We're looking at Bitcoin today, and I have been showing the Bitcoin charts across many of my other crypto analysis videos. And Bitcoin is, of course, the biggest crypto. Ethereum at half the market cap of Bitcoin is the next biggest. These two indicate the sentiment across the crypto space. So wherever Bitcoin and Ethereum go, the rest of the cryptos go. In Bitcoin, we had what we were calling a nested 1-2-1-2 setup. So you had a 5-wave setup here, followed by a 3-wave correction. That was calling our bigger wave 2. And then we had a non-standard wave 1, much bigger than you'd expect. It looks a lot better in our logarithmic chart, which we'll go over shortly. And then we had a super deep pullback where we almost retraced the entire thing. So we came very close to completely invalidating this 1-2-1-2 setup. Ethereum looks a lot cleaner. We had a 61.8% retrace of this smaller wave 1. But in Bitcoin, we went all the way down to the 42,000 mark. So of course, I have marked here 39.6. We could not break that because that would indicate this entire thing is a fake out. And that would more or less confirm that we are following the alternate red pattern, which is this pattern here, with this entire rally from July all the way into early November as just being a big B wave fake out. So we'll look at that scenario a little bit more closely in a bit. In our short term, however, ever since our bottom at 42,000, we do have what looks like 5 up and 3 down. I'm going to zoom up a bit just to get a better look at this situation here. So when we look at this thing, we have our bottom at 42. We have 5 up. It is proportionately correct. We have a 3 and a 4. Fifth wave hit the 0.61 extension, which is what you like to see. You have this messy, choppy, ugly correction. Probably an A, B, C. Maybe it's an A, B, C. Not totally clear. Ever since that, we may have another micro 1-2 in place. So if you count from here, 1-2, double bottom, that could be a 3, 4, 5, or you could count from here, 1, 2, 3, 4, 5. Any way you cut it, this looks like it could be impulsive. It doesn't look clearly and obviously corrective. You don't see as much whipsaw. You don't see as much overlap from the troughs to the peaks. So I'm optimistic. Since this, we have what looks like 3 down, 3 up, and maybe 5 down. So it could be an A, B, C, or this could be the beginning, something like that. We are a bit oversold at the moment because of how we crashed today. And we're going to see how this holds together. We're sitting about 49,163. We should be taking off relatively soon if this really is a C wave. So on the big picture, you can see the big picture pattern, the big picture structure. So our 3rd wave top, major 3rd wave was in the spring of 2021. This pullback, I was calling the 4th wave, and our nested 1-2-1-2 setup. I don't have the lower degree wave 1 labeled here, but this is the 1-2-1-2. And you can see how we almost broke the entire setup with that pullback in early December. Now here, the proportions look a little bit cleaner, not quite the 1.0 extension of the 1-2, this micro 1 here. But again, it's stretched. I take it as a bullish sign, but it also makes this red pattern more likely. So this red pattern, of course, says that this entire pullback was the A wave. This whole rally was just a 3-wave correction, a fake out B wave, and we're about to crash all the way down into the 24,000 range. That would be the C wave. In order for this to happen, we need to see us break the low that we hit. So we need to break below 42,000. We need to see a 5-wave impulsive structure, which I don't think we have yet. This looks more like a 1-2-3 maybe. However, we could bounce, go a little lower. However you cut it, could be a leading diagonal. If we see a 5-wave impulse breaking down below 42,000, that would be a big red light flashing. That'd be a very good indicator to get out. I would personally, I'd be looking at Ethereum as well, of course. If that happened, Ethereum would have to break, I think, what was it, 3,500, something like that, 3,300. I can't remember exactly what the resistance was. If it broke those two, I would seriously consider selling most of my crypto, if not all of it. So that is something that I would seriously consider. Right now, we're not seeing anything bearish like that, but we do have to keep in mind that this red pattern is still on the chart. Good thing is, outside of Bitcoin and Ethereum, our altcoins had a pretty good 2 days or so in the markets. They seem to be coming back. If we hold this together, our 3rd wave is looking at somewhere between 91 to 107,000. So those are our standard third wave targets. It sounds crazy to think that right now because we're at 49,000, but those are the 1.32 and 1.618 extensions of our larger degree wave one. And if this really is a nested 1-2, our targets are probably going to go a lot higher than that. I mean, we could cross 100,000 easily on just a third wave alone. Our ultimate fifth wave would, of course, follow a fourth wave. Fourth waves are usually shallow and they're long and winding. Could be a multi-month affair. Fifth wave target, the standard targets fall between 117 to 137,000. But I've mentioned time and time again, when we look at our big picture structure, you have certain equivalences. So we have our entire 1, 2, 3, 4 structure. Usually your fifth wave target will fall somewhere between the 0.32 and the 0.61 extension of that. And that would put us somewhere between 83,116, I'm sorry, 83,116 and 161,000. So those are 0.32, 0.5, and 0.61 extensions. They're still holding clean. It's absolutely still possible for us to get there based on what we're seeing right now. So I remain optimistic. There are other equivalences as well. If we look at this whole thing as if we look at the big picture over here as a 1-2, we have some Fibonacci confluences in that range, in the 110,000 range. We have our purple 1-2, and usually you see 1.764 or the 2.0 extensions as target ranges. Any fib above that could be our result if we have a fifth wave extension. So again, things are looking bullish for the purple pattern. What happens after that top? That would be the major crypto top. Good time to take profits. We may be in a multi-year bear market pullback. And I have a wave 2 drawn here nominally. It could take us well below $10,000. So it would not be fun to fall from the mid $100,000 range down to that point. So that's not something to worry about right now. We got a long way to go before we get there. Red pattern, again, like I said, 39,600 is our target, is our key support. Don't want to break that. If we break that, that's a panic alarm going off. If that happens, I'm definitely going to be posting a lot of videos frequently just to keep us all posted, keep us updated on what's coming up next. So if you want to get those warnings, get my strategies, how to get in, how to get out, don't forget to subscribe. And if you enjoyed my video, don't forget to like. Until next time, thank you for watching and happy trading.